If I don't know what I'm trading under, and if I don't know if it can't change, I won't be comfortable there.
Michael Cahill, CEO of Douro Labs and initial contributor to Pyth Network, the data layer making the price of everything available everywhere.
Pyth has already outgrown one blockchain.
With over $1.5 trillion in volume and direct data from giants like Jane Street, Revolut, and Cboe, he's redefining how the world accesses financial data.
Market data, in some sense, is sort of the electricity for the financial industry.
Now, Michael's joined as a core contributor to Fogo Chain, marking the beginning of DeFi 3.0.
It's outperformed gold, the S&P 500, NASDAQ, oil, you name it.
If you're new here, welcome to Fogo's Hub. Fogo's Hub is your go-to resource for learning everything about Fogo Chain, for the community, by the community, with new content every week. We are independent from the core Fogo team, and we're here to educate, inform, and connect. Whether you're just getting started or exploring deeper, Fogo's Hub is your trusted gateway to the Fogo Chain ecosystem, and our mission is simple: build the best education hub. Hello, Michael. Thanks for being on the podcast. We're here in Portugal, and I just wanted to start with the basics. Who are you?
So I'm Mike Cahill, as you said, and I'm the CEO of Douro Labs, and we've been a core developer on the Pyth Network since the start, and we're now a core developer on the Fogo chain.
You've been throughout multiple different countries, New York, you've been in London, and now you're in Portugal. What brought you to Portugal?
Portugal, I fell in love with the country when I first came here. My wife's Brazilian, and her family had moved here about 20 years ago. We actually got married outside of Porto. It was at a time where I was living in London. And so it was an easy hop to come back and forth and be able to really enjoy the country. I never imagined I'd be able to move here so quickly. It was really enabled by COVID. And when the world went remote, I was working at Jump, and it was an opportunity to be remote from, instead of London, be remote from Portugal. And then basically the Pyth Network happened, Douro Labs happened, and we were able to make it sort of permanent. And I've been pretty thrilled to be here.
Yeah, and anything that's kind of, any lessons that you've learned from living in different countries? I guess you're going to see efficiencies and inefficiencies in different countries. And then from there, like anything that's kind of helped you just living abroad in different countries to work out why, leading into Pyth, why Pyth was so vital.
Yeah, I mean, you basically get a whole bunch of different attributes at every city, right? So New York is where I grew up and where I worked in finance in my first part of my career. And that has a tone and certain levels of transaction-based relationships. London has also got a fast-paced tone, but is remarkably slower, at least in my opinion, than working in New York, and a little bit less transactionally based. Portugal obviously is totally different. There's no, particularly in Porto, there's no financial industry here. And so the industry is, totally different. So I work online and I work with people around the world, but we're headquartered here. I would say that, different stages in your career, you probably want to be in different areas. It's great to start out in New York because you're just filled with all this energy and the free time, and you want to spend as much of your free time learning and working as you possibly can. And London was a good transition because I had just gotten married prior to kids, and I lived there. And so I think that, if you're choosing an area, for instance, or you're thinking about how you want to be positioned or where you want to have a company be positioned, you need to take all these things into account. And so we've been really lucky to be able to attract people here, but we've created a very specific sort of office environment where we come in every day. We're able to push each other. It's kind of a loud startup. A lot of the ethos that we take from working at a high-frequency trading firm like Jump, challenging one another, whiteboarding, those are the characteristics of the office that I really enjoy. And, we had to build that. It didn't exist here before.
Yeah, it's a really nice setup that you have here. Beautiful location. Just having everybody in the team, it's fantastic. In the one location. Yeah, I live in Portugal as well, as you know. And one thing, when I went across to New York a month ago for Solana Accelerate, I was, speaking to ordering a bagel as an example, and it was a busy shop, and I said, "Hi, how are you?" as an opener, because everyone's chatty in Portugal, and the guy just looked at me just just get your order out. What are you doing? Why are you wasting my time? It is very, very different.
Yeah. That is the one no when you go into a bagel shop is you never say hi.
All right. Noted.
Yes, exactly.
Definitely noted. So we're about an hour and a half away from Nazaré, which has the largest waves in the world. And you've taken up surfing? You're a surfer?
Yeah, I have. I've taken it up in my 30s, but I've gotten really into it, and it's been an amazing passion of mine. There are so many similarities with starting a business or a project and surfing. You have to do sort of the right location selection based on the time of day, based on the conditions that are at sea. And then you're going to kind of optimize for where there's a crowd and where there's not a crowd. And all these things are, kind of prevalent in starting a business, right? Like, what business do I want? What's the opportunity? What's the market? And then, conserving your energy to make sure that you're in the right spot at the right time. I think about it a lot from a perspective of, if you are trying to like maximize riding the largest wave, right? Like having the biggest impact for a business, your resources or your energy is really like the money that you have or you've raised. And so there are certain times where you want to increase like their speed of which you're doing that. And then there's other times where you need to conserve because you don't know if the big wave is coming, right? I do think about things in that sense. Like there's, a wave of momentum and opportunities that happen at certain times. Like when there was the Industrial Revolution, you had big, impactful companies that came out of it. But then for a while, you didn't have huge ones. And so we see this when there's these transitions. And I think that, Web3 is one of these transitions. We'll see a whole lot of people be brought on to do the things and operate within Web3 or in crypto that they've never been able to do before. And it's going to be amazing to be a part of that.
Oh, 100%. Like sometimes, in the crypto, there's so many things that just don't really have product market fit. And then there's things like Pyth and Fogo, which I feel have such a huge amount. And yeah, you're on the right wave, is my opinion. And interesting that like there's so many lessons from surfing that just apply to business. Maybe I should start. I mean, I tried once. It wasn't very good.
Yeah, especially if you live in Portugal, I do highly recommend it. It takes a long time, and like the learning curve is very steep. I'd compare it to like learning jiu-jitsu or tennis, neither of which I'm any good at. But but surfing spoke to me, and I was able to kind of stick to it. And I've been to Nazaré a few times actually. Our one and only sponsored athlete is Nick Van Rupp, and he's a big wave surfer. He just won the Nazaré Challenge with his partner earlier this year, and a few times he's been able to tow me into some relatively big waves, not giant waves, but relatively big for me for sure.
I definitely recommend anyone going to Portugal, if you can go to Nazaré and see the jet skis towing in the surfers, it's unreal.
It's really insane.
And that's what you're doing.
Yeah,
You're being towed
exactly.
in.
I think it actually looks a lot scarier from the outside. Although when you get stuck under a wave for a long time, it is pretty scary.
You said in a LinkedIn post that you were humbled badly by a wave. And there was also a breakthrough moment that you landed your first barrel. And I'm guessing this is a big de-stressor as well for you, but also maybe it helps you stay balanced to approach these TradFi giants.
Yeah. Being able to go after something that is a little bit beyond your elements or beyond your kind of expertise is something you have to do. I think about that in all sorts of elements, right? And so if you use that comparison for what we're trying to do at Pyth, Pyth is incredibly ambitious from the perspective of trying to disrupt the market data paradigm. It's been entrenched for a really long time. There's been no new entrants, and it's huge. And the only way you would be able to combat it is to build up a network brick by brick. And nobody had anticipated you'd be able to do that. And so I feel like that's been, the underlying theme is if you think you've got the necessary skills to be able to, accomplish a very ambitious goal, you should go for it.
Is it kind of like a supercharged state of flow? Like, state of flow, you want difficulties that you can overcome, right? But then, when you're up against a massive wave or, which translates to what you're building, if it's too big of a problem, then you're maybe too early by a few years. But you just seem to be in like a supercharged state of flow where the issues, latency and whatnot, that you're overcoming now, that just no team's been able to do before.
Yeah, absolutely. I think timing is everything, just like with wave selection. And then the ability to have that confidence with the right team, the right training, that's absolutely the case. Had you done it at the wrong time, you pick the wrong wave or you're there the wrong day, none of those things are available to you. So, that timing is super important, but, so is having the right tools in place and training and team and so on.
Yeah, definitely. So how did your experience in FX trading, high frequency trading, and then Morgan Stanley shape your perspective on the limitations of global financial markets?
The FX market is global, but it's fragmented at the same time, right? So global in the sense that you trade all currencies to one another, but fragmented in the sense that there's no singular clearinghouse like there are in like regional asset classes. So for example, like the US equities all trade on regulated US equity exchanges. They clear to the same like clearinghouse that's owned by the DTCC. And so you have all these efficiencies because it's in country, but nobody can trade it from another country. So what's cool about the FX market is it sort of trades on a variety of unregulated exchanges, but is performed by regulated entities. And so that gives you kind of a framework for what the crypto market can become, right? Because it's global in nature. It will operate in all different types of regimes or regulated, highly regulated or lightly regulated areas. And you can kind of solve that already because you just can regulate the underlying people to a certain extent. And you can allow it to happen. So to me, I think that the FX market is probably the biggest corollary we have to like a global crypto market and a model that you can use for an additional set of regulated real world assets that could trade in this way.
So was there a moment like when you're in your traditional finance career where you just realized this is not the future, this like the light bulb moment? What was that moment?
Yeah, I think that the entrenched sort of technology and the growth of that technology has really stagnated in the traditional markets for a long time. So I worked in FX for over a decade. And, I was going to the conferences and hearing the exact same stuff year after year after year. So there was this sense of stagnation. And I think that just like in surfing, you get these little bursts of new technology that allow you to either replatform or think about things in a different way that disrupts the current order. And the disrupting gives you all these new opportunities. And the way that technology is, kind of reflects that disruption or that, that new growth is usually you break down barriers, you make the market global, and then you increase the users, but all at a lower price point, like a per unit economic. And that's been the history of kind of technological breakthroughs. We haven't had that happening within the global financial market for a really long time. It's been the same set of banks, the same sort of hedge fund clients, and the same set of retail brokers, and the same sort of set of users. And it's just been really stagnant. And there are so many people that are left out of that financial market because they either don't meet their qualifications to become a part of it. The barriers to entry are quite high. Market data in particular has become really expensive and very exclusive. So it just felt like it was very ripe for a change. And, that was a time when the crypto market sort of developed and you start to see for the first time a new systematic trading firm or lots of new systematic trading firms. That's not really the case within the existing markets, right? Like Jane Street owns all the ETFs, Susquehanna does all the options, Jump does all the futures, Citadel or Virtu does all the equities, and they're very entrenched. It's difficult to disrupt them, but in the blockchain market, it's like these are all brand new. So I think to me that's the most exciting part is you actually get this opportunity to rethink things for the first time and sort of disrupt these existing paradigms. And the big winners in those can also be the winners again. It's certainly a possibility, and the ones that are most excited about it are probably the ones that are going to do really well.
And right now, we're seeing obviously the CLOBs, central limit order books, starting to disrupt in a decentralized way Binance and Bybit, the big giants, which is probably a good lead into Fogo Chain.
Yeah.
Obviously, Hyperliquid's got some success. We can touch on that later, but there's so many layer ones out there. So, why design Fogo Chain when you've got Solana there already? Why Fogo Chain in this kind of sea full of layer ones?
Yeah, so Pyth has already outgrown one blockchain. And so Pyth started on Solana mainnet and outgrew Solana after being about 50 to 75% of the block space. Now the block space in Solana has grown, but PythNet actually is probably even bigger, or at least the TPS on PythNet is quite high. So it was a fork of Solana mainnet, and we created PythNet. And then PythNet really started to power all these other blockchains. And the problem that we ran into is that 400 milliseconds was too slow. We initially moved out because the TPS was too constrained.
Yeah.
But now then we've run into this fact that, that 400 milliseconds is too. So 400 millisecond is about the speed it takes to blink an eye, but, it's quite slow when you're thinking about doing a complex action. And if each element of that needs to wait for an eye blink, that's, it's quite slow. It's like a stop motion film. And so we wanted to be able to operate in a space that had much lower block times just for Pyth to be able to support the mission that it's on. And there's always been the notion in the back of my mind of co-location of data, a co-location of different traders. That's how it works today in traditional finance. And when you kind of set yourself into the future, there's no scenario where I can think of where it's decentralized finance won, but it's got all these performance things that are not nearly as good as what it was before. That doesn't happen. It's not like you think about Spotify and you're like, yeah, you get all the world's music, but it's all slowed down by, a half a second. It just doesn't happen. So it has to be the case that you can produce at par the level of performance in order to be able to, kind of re-platform and disrupt the existing financial markets. And that wasn't really possible before. And so Fogo Chain, I think, allows us to be able to do that now for the very first time. And it's at a fortuitous moment, as you mentioned. We're starting to, for now, see the very first time, a migration towards decentralized exchanges. What we've learned from blockchains is that people want to trade or actively manage portfolios. And so on centralized exchanges, the numbers of users actually dwarfs the numbers of users on a US brokerage. So in the US brokerage, you've got Schwab has somewhere around 30 to 40 million users. Robinhood's got about 20 million. E-Trade's probably around that as well. The US or the global market for FX or contract for differences, sort of CFD brokers are much smaller. They're in the single digit millions. But then you look at centralized crypto exchanges and they're over 200 million for Binance or Bybit, for OKEx. Bybit's around 50 million. So they're huge numbers. So people do want to get involved in actively managing a portfolio, but you have these limitations FTX is still fresh in so many people's minds. And there's also just this opacity around sort of the rules and is what's available to me available to everyone. And if you can make that codified into a protocol, well, then you've actually created a much better experience. It's great, but we never know when they're going to change the rules, or is that big trader getting the same terms and conditions that I'm getting? How can I check and be able to validate that?
Yeah. Last cycle, 2021, when Solana just came out, I know there was a Sam Bankman-Fried. He was showing a demonstration where you could basically load a wallet, load a JSON file with some Sol, and just type on your keyboard, and every single letter was a transaction. And I was blown away from this because I'd been playing on Ethereum. Yeah. And now, of course, don't really want to segue into Ethereum, but they're not really doing much in terms of improving their speeds. And now, Solana, 400 milliseconds is slow. I can see my own trades, sometimes it doesn't get into the block, and it is way too slow. And right now, I think your testnet's doing 10 times faster block times.
Yeah, 40 milliseconds, which I think is a really good place to be. The human perceptible difference of that is very, very low relative to something even lower. Of course, we want to strive to be as low as possible, but when you get into that sub 100 millisecond time scale, then things actually feel real fast. It's going to be more important to get even smaller when you're just running everything on an API. And I think we'll see an explosion of kind of API trading at some point in the future too.
So on the subject of APIs, do you think there's entering an era where we're going to have AI agents just pulling these APIs and making trades off this?
I do. I think that API trading to date has been really reserved for professionals and experts. And I think AI will give us the ability to really democratize that. If you can kind of write in a strategy in a simple text and the agent can go convert that into a trading machine or a trading algorithm that can express it, you'll have an API that you can effectively understand and trust. And that's where it becomes really important for that human perceptible difference to, really get as low and as efficient as possible. Because on an API, 400 milliseconds is a really long time.
Right.
For the eyeball and for the clicking, it's it's a long time, but not really long time. So that's where I think performance will become even more important in the future than it is, kind of today.
For anybody watching this podcast, if you think 400 milliseconds isn't a long amount of time, and let's say you care about privacy, so you have a VPN, go on VPN to a country on the other side of the world where it goes through the server and then try and load your web page. And you can just see with a ping of 200, it's insane.
Yeah.
So 100%, I get it. Now, how fast do the APIs have to be for these AI agents to be successful, I guess, competing against other AI agents?
Well, that's a slightly different, I think, axis to kind of compare it on. So you want to basically have the most efficient way for the API to be able to execute, for kind of transactions to be bundled. It gives you a more tailored precision on the market. If you're sort of bundling things at a snapshot that's longer, then in between that snapshot, you don't know what's really happening. Whether or not the APIs start trading for even smaller differences is kind of to be seen. But I think that the primary benefit that we get from having a finer resolution is really going to be around the ability to seamlessly transact. So it means that you can get in and out of a position very easily. I don't know that it necessarily means that people are going to bring down their risk parameter time horizons. They may still trade for even a minute, 5 minutes, an hour, or even days, but you'll still get benefits by having this finer resolution than you would on a half a second.
And retail will be able to use this when projects have built this out.
Yeah, absolutely.
It won't just be for the professionals.
Yeah, so retail will certainly benefit because the market makers that are already trading on APIs will be able to make tighter markets, given the fact that they're able to react faster to a market that's moving elsewhere, right? If you start to bin things, then you can only make your markets as tight as the highest volatility that's likely to happen within that bin. And so the wider you make the update time, the wider the markets are inevitably. So retail benefits greatly by having this reduced block time from these APIs. But then their APIs will be also more efficient to trade with sort of these market making APIs. And I think that you get this double benefit from that.
So let's just zoom out a little bit and just touch on Pyth, because you've been pretty vocal that the way financial data is sold today, it's fundamentally broken. It's expensive, it's siloed, and it's often sold back to the people that created this. And what exactly is wrong with how the market data works today? And how did Pyth actually change this model?
Yeah, if you look at the growth of the revenues in the market data industry, they've kind of exploded. And what you get for that is not much, right? So market data in some sense is sort of the electricity for the financial industry. It's powers everything. It's a necessity to have, but it's not something that you necessarily think of when you're trying to compete. Right? You don't think that, my house has got the best electricity. You either have it or you don't.
Right.
And so it feels a little bit like a tax. And now the reason why there's such frustration around it is imagine your electricity bill just keeps going up a huge amount every year. You're eventually going to get very frustrated and you're going to say, there must be something we can do about this electricity bill. And so that's sort of the nexus of where Pyth came from. It was large traders who are kind of sick of paying this really exorbitant electricity market data bill, and said there must be a better way, and decided to work together to form the Pyth network and say, we can pull together our data. So you think about it a lot like the gig economy, but for market data, right? So that's why I think about it as the Uber is you've expanded from, let's say, a highly consolidated or concentrated set of taxi drivers to now a whole set of people who've got a bit of free time that want to go and drive a car. Who wins is the user, the end taxi customer. They now can choose from a lot more people. And also, you're able to implement stuff that just makes a whole lot of sense. So Uber, in order to be able to facilitate this, they built a whole operating system that also materially impacts the enjoyment you get out of riding in a car. Exactly where you're going, he's following the right route. Versus the taxi industry, they never really had any incentive to do that. So we were able to harness the aspirations of all these big trading firms who have tremendous amounts of data and get those aspirations and build a new data paradigm that had better practices in place. So for example, you can do that all on a public blockchain. and you can create things like confidence intervals that didn't really exist before in the existing market data setup. You can put in a staking model and create things that make it really transparent, resilient, robust, and it's really the evolution of market data. Because market data on those exchanges, it's a place that you buy it, but why are you buying it from them? Is because, well, they've got a good reputation. They've been around a really long time. It would be silly for them to, go do something bad with your market data. But you still have those centralization risks. They've obviously just sort of exploited that power that they have and been able to take the pricing pressure onto the market. And so this is like, a better system and one that we think is the evolution. And I think that when you zoom out and you move forward into a couple of years and you think about how market data is consumed and, describe it with Pyth. Pyth is a place where all the world's market data is collected from all the sources and it's made available everywhere. That would sound very common sense, right? That sounds, not dissimilar to the way that Spotify or Netflix works, right? It's all the movies, all that stuff available, any movie, anytime, any place. And Pyth is this, right? It's any price, any time, any place. And then when you kind of go back, it feels as archaic as all of those other industries that were represented, right? Like the blockbuster industry gets disrupted by Netflix. That's how it feels today. If you want to buy market data, you've got basically the generators of market data are all these exchanges, but it's highly fragmented. So just going to the US equities, you've got about 14 different regulated exchanges. So then what do you need? Well, you need a distribution agent who's going to go package it all together, normalize it for you, and sell it to you. And so those are the two big players, the exchanges, and you've got these distributors like Bloomberg and Refinitiv and FactSet. And collectively, they make about $30 billion a year and split about between the two. It just feels unnecessarily complicated and unnecessarily expensive.
Yeah, $30 billion. Wow.
Yeah.
Profitable business.
A very profitable business. And in fact, in the last 20 years, the revenues for market data have gone up 15x. It's outperformed gold, the S&P 500, NASDAQ, the oil, you name it. It's outperformed all of those. So it's effectively the most valuable growth commodity out there.
So it's kind of looking like this, but it's going to start to look like this.
Well, I'm not sure that we're going to kill the value of the market. I do think that it's the case that we are realizing the value of it. I think that the extractive nature of singular sellers is going to change, right? It'll get more democratized, which means that more people can access it. But it's been the case where if you looked at the total revenue for like Blockbuster, it had stabilized for a while, but that didn't mean that the appetite for watching films, had stagnated. When Netflix came out, like they just found new users. And that's actually the thing that I think we get out of the growth of either Fogo or Pyth is we're going to decrease the unit economics and make it more accessible for people around the world. But at the same time, we think that there's going to be so many more people that are going to opt into the system that the entire network revenues and like market data revenues in general will maintain their trajectory of growth. It'll happen in a more evenly distributed way.
And what do you think the time frame on that is?
Well, I think it's sort of happening now, right? So we've been able to develop a supply that is really comprehensive. Supply of publishers. We've got all the large trading firms. We've got a lot of the exchanges that are submitting their data. We currently have about 1,500 different symbols. It covers crypto markets, US equities. We've got futures and rates, FX, and so on. We'll continue to scale that. We've been largely dominant in providing that data on blockchains. There's over 100 blockchains that Pyth data is available. It's powered over 500 applications. We'll start to see that being used off-chain as well. And that's where we think that the revenue opportunities are to disrupt $30 billion, right? Like we're certainly well positioned for like the net new consumers of market data. And so these like 500 or so applications, these are the first time they're getting data. The $30 billion is where you have to be sort of disruptive. And I think Pyth is well positioned to be very disruptive in that market from a pricing perspective and be able to take market share and then continue to grow via finding net new users of market data.
So you've onboarded some heavyweight TradFi firms like Cboe, which is the Chicago Board Options Exchange, Jane Street, Revolut. And what's the most surprising feedback you've received once they saw Pyth live?
Yeah, I think everyone gets first enamored by like the business model. And anyone who's got data that feels like they haven't been able to access the distribution of that like data and the monetization of it, like the model clicks immediately. What I think they get most excited by is the fact that there's all these elements to the Pyth model that really make it feel like the evolution of market data. So the transparency on the aggregation for every Pyth price, the fact that they're able to stake to the quality of it, that the whole network has got a huge amount of stake that backs up the integrity of the price. Those are all things that don't exist in the current market data world. And I think those are the things that give you that aha moment, right? Like I came for the kind of the economic disruption, but now I'm really enamored by the technological disruption.
So you have trust, you have an economic model that secures that trust, and it's growing, and the traditional system, it just has trust.
It just has trust.
So at its core, Pyth is bridging TradFi and DeFi, but let's just talk about adoption just for a second. What is your take on how institutions will actually adopt DeFi? Are we close? Because this is Fogo Chain's market.
Yeah, I think that we're certainly close to a big disruption on sort of the retail paradigm. As I mentioned, we've already seen a huge amount of growth of just users who are actively managing crypto portfolios around the world. And so you've got the 200s millions kind of range. And that is large relative to like the retail actively managed portfolios of mostly equities in the US. Institutions are active in the crypto markets, but only a small select few of institutions. So the way that I think this grows is we'll start to see sort of the replatforming of people who are on centralized exchanges over to decentralized exchanges for the benefits of what a Fogo application like an Ambient will have over a Binance. And that's going to be the codification and like the open sourced element of it, so that people know that they're on a fair and even playing field relative to their peers, as opposed to has there ever been a backroom deal done. And then I think we'll be able to gradually get more and more institutions in. We've lowered the barrier to entry by making this have a singular point of consensus at any given time. And so the follow the sun multi-local consensus is a familiar paradigm for institutions. For institutions to trade on even a Binance, it's quite confusing, right? They don't have a data center that's as easy to connect to as connecting to, say, the New York Stock Exchange or NASDAQ. Likewise, Fogo gives that, very clear and that very analogous experience. And so, I think we solve first for the retail, and then you start to get lots of institutions who are continuing to go and trade, roll up and trade. And that's how we start to get everyone on.
This summer, Robinhood's going to ship perps for retail. Coinbase will ship perps for retail. Then, what happens?
Yeah, I mean, I think that the way, so I think that the big competition will be on the centralized versus decentralized exchanges. And certainly Hyperliquid has been the most successful decentralized exchange by far to date. Prior to that is probably Jupiter, but their numbers are still relatively small. Like monthly active is well under 1 million on Hyperliquid. Even on Jupiter, it's well under 1 million. Growth trajectory is really good, and volume trajectory is quite high. So they've been able to attract a lot of the really active traders. Now, if you compare that to Robinhood's around 15 million monthly actives, so it's much larger there. And then Binance is much greater, as I talked about before, is over 200. So you got to put these things into scale. And I think the most important thing is going to be able to compete at the point of decision for someone to get into a new market. So for Robinhood, like they're trying to remove any of the temptation for their user base to go trade perpetual markets that they don't have, right? They're trying to maintain as many of their users as they can. But globally, more and more people will enter into like kind of the perpetual markets. And the easiest way to do so is via a crypto market, right? And so I don't think that like 250 million is even sort of, the end state for this. I think we've got the potential to be into the billions of users. And so at that point of decision I want to be part of this market, do I go to centralized exchange or decentralized exchange? I think it's going to come down to what are the benefits. And so right now the UX has been the limiting factor for DEX usage. Up until Hyperliquid was out, you had a really clunky pay for gas, paying for approving transactions to move your orders and so on. Hyperliquid has been the best at delivering a centralized experience. But there's a lot of benefits to a really, more decentralized protocol, right? Like there are limitations to even how decentralized Hyperliquid is. For instance, to date, their code base has not been open sourced, so you don't know if there is a speed bump, for instance. Like that's not clear for a lot of people. And so there are ways that people feel disadvantaged on that. Similar to on Binance, right? Like Binance doesn't tell you if there's a speed bump or if everyone has sort of the same rate card or, what the advantages some people might have, like rate limits and so on.
And by speed bump, you mean like some traders will be in a faster lane, their orders will go through and you might not be?
That's right, yeah. So speed bump generally means that I submit an order and then before I get confirmation, there's some wait time and then there's a proximity check to the market and the order is either executed or canceled. It's fairly common within the FX market, for instance, to have these speed bumps, but they're well documented. You know exactly what they are. When you don't know what they are is when there's a problem. And if you don't know if they're going to change or not. So I think that's one of the areas where when you start to get more institutional traders involved, they'll look at something like a Hyperliquid and say, if I don't know what I'm trading under, and if I don't know if it can't change, I won't be comfortable there. And that's one of the things that I think if you do this in a way where there's transparency around it, the elements of decentralization and on Web3 that are sort of best practices, right? The composability, for example, like composability, which means that we're going to take one component of it and have it, work under its certain set of rules, and we're going to be engaged in that as sort of as another component. So, for example, like using Pyth as the oracle, which has got these set of rules and criteria, and its services, lots of different blockchains. That's one element of trust. I know how Pyth works. I know how Pyth works for all these different protocols. I know that there's lots of different trading firms that are disclosed, and exchanges that are disclosed that are providing data. Like that's something that people are very comfortable with. If you have an oracle that you're running yourself, for instance, you don't know whether or not you can trust it if it's going to move.
Right.
So I think it's going to be the biggest advantage that the industry has right now is that we're getting to a point in time where that wave is really reaching a crescendo, right? So the reason why Instagram was so valuable to Facebook, even though it had a relatively low user base, was because all of the net new people being onboarded to social media at the time were deciding between either Facebook or Instagram. It's not like your typical switching cost where you actually have to be 10 times faster or cheaper. You're actually going at the point of decision and people are evaluating two like-for-like comparisons. And that's why I think social media has been relatively entrenched for a while, is because TikTok was the last one to go get the youngest generation. And whenever there's a new social media, it's always the youngest ones because they're the ones that are being onboarded, because the rest of the people who are on it will generally say, it's good enough for me.
Yeah.
So I think we're now at a point where it's so enticing for people to get into the perpetual market. I think the innovation that we had for, a perpetual future was a good one. Like the whole settlement and rolling of futures is clunky and confusing to lots of people. This is more of an elegant way to be able to express your, opinion on whether or not something is going to go up or down. I think that's reaching to a fever head where we're getting lots of new users. So it's going to be super important right now to have the best possible offering because you've got net new people coming in. You're not trying to, Fogo's job is not necessarily to take market share away from Binance. For sure, it expects to be able to do that. But we think that there's all these new users to Binance, Bybit, OKEx over the next few months and years where they'll evaluate an ambient on Fogo and they'll put that package together and compare it to a Hyperliquid or a Binance and then make their decision. And we feel really good about the package we'll be able to put together and our ability to kind of convince them to join.
So Fogo is the new TikTok.
In some senses, I think that's right. I think that there are certain elements to it where Fogo is innovated and you need to have that. And then there are going to be elements where you need to continue to innovate. So the core innovation from Fogo is, we've put a set of decentralized validators into geographically specific locations. So we're able to provide true decentralization. You can prevent from a power failure, a censorship of a government or regime, because you can go to a backup location. But all the while, giving you the kind of the end characteristics of a institutional level quality of trade, of speed and throughput and so on. So that's sort of the core base. And then building upon that it'll be incumbent to be able to do other things, like making sure that the transactions are gasless where they need to be, that the Oracle is embedded into the update at the foundational level and doesn't get kicked out because of priority fees or something like that. So all these architectural designs, I think, really will set Fogo up to be able to be a differentiated ecosystem.
Yeah, and I would say Pyth has probably learned the most amount of lessons and primed for the best opportunity here, because you've learned everything that didn't work well with Solana, went off, as you said earlier. You had to go and create your own fork of the SVM, and then it's faster, better than Chainlink, significantly better than Chainlink. And now this is all enshrined and included in, and I didn't even realize that, something as simple as, an Oracle may not update because there's congestion on the blockchain and the priority fee is enough, and then somehow with technical magicry, it doesn't get pushed. And this way, the Oracle price, it always gets pushed.
That's right.
So right now on Twitter, everything I'm basically seeing is all about CLOBs. Hyperliquid, Bullet, Monk from Masari is just tweeting. Why is Fogo Chain the best suited for CLOBs? Please be aggressive. Just give it to me straight.
Yeah, I think that in one sense, Fogo is the evolution of the Pyth network. And so if we were to try and envision Pyth having a co-located execution environment, that would be Fogo. Now, what's Pyth's superpower is that it's connected with all the institutions around the world, right? From Revolut to Jane Street, Susquehanna, DRW, Jump. And what do those guys all do? Well, they all trade a lot. And being able to provide that base and an high performance execution environment, I think it sets it up for a really interesting competitive environment.
So in some ways, you've basically done the business development for 4 years that all the new CLOBs haven't.
Yeah, I think we do probably have a big head start in that sense.
Definitely. I'm excited. This has been a great conversation, but I'll end with one last question, maybe a little bit of a life lesson. What's a moment where you have failed, and what did it teach you?
Moment I failed is I actually started my university as a mechanical engineer. And after about 2 years, I was working really hard, but I was pretty mediocre at best. And my university had a really renowned entrepreneurship program. I was actually doing an entrepreneurship minor, and I basically threw away the 2 years of mechanical engineering, switched over to this business major, and became the president of an entrepreneurship club, and finished kind of at top of class with all these awards. And that made me kind of unafraid to be able to assess the situation, avoid any sort of sunk costs that I had going in, and trust my gut to be able to find something that worked really well for me and be successful at it.
Basically, it's like the secret to no regrets.
Yeah, exactly.
Amazing. Thanks so much for doing this podcast. This was great. Learned a lot. Super excited for Fogo.
Thanks so much for having me. It's been a pleasure.
Cheers.